Hoya! Japan. Monthly candle chart. Explode that. What are we happening? What is happening with Japan, guys? I keep using this as an example that they had an asset bubble in the 90s. Well, hold on. I'm not going to use my Owanda ticker. I'm going to use good old-fashioned Nikkei right there. I use that as an example, guys. Oh, look, it looks so high. It looks so high. Well, back up. Whoa. Back up. Whoa. Look at that. Look at the crazy mountain. So right here. Whoa. Well, drawing tools. Don't need that. Asset bubble. QE. Low interest rates. I don't know. The whole shebang. There's a nice Wikipedia on it. Stage 2 on the monthly candle chart. Up, 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 up. And that thing retraced. Gotta get the Ichimoku cloud. Where are ya? There you are. And look at that, man. Insane. 23% pullback, 38%, 50. So almost there in the initial one. You hit in the 2 months after it broke, or even 1 month. Let me zoom that in. Broke down, but this is really the candle that broke down below this monthly defined. Whoa. Breakdown line. 38%. Bounce back up. Great entry right here. And you see, you even had a close above that 12-month, that monthly defined breakdown line right here, guys. It closed above, the next month down. And when it starts going down, closing below that monthly defined breakdown line, great risk to reward entry right here. Low risk area. You're turning the corner on the monthly chart. You're not too, when that monthly candle closes down here, you're not too far away from the 12-month moving average. You have the support, now turned resistance again, tested, sunk through it. It was strong enough to sink through it, but it came back down. And after that, from up here, whoa, 38, whoa, 50, whoa, 60. And that's fast action. After that, starts slowing down, pulling back up, 12-month moving average, always closing below, going back down here, consolidating. This could have probably whipsawed you out. You could have maybe entered after the weight of evidence was still good. And then you had another leg down, 78%. So you can make a fast run on this monthly candle chart, 50, 60%, pretty rapidly. And after that, it just needed more time. It just started taking its time going down, 78%. So that is an asset bubble popping, letting air out. And after that, guys, look at that. What was that? 40,000? 39,000? Barely nothing happening here. Oh, even went down. Wow, all the way. So somebody told you, hey, that's a full retrace, guys. That is insane. I've never noticed that. So in 2003, it did full retrace. So I don't have the price action here, but it went down. Starting to go back up. And here we are today, guys. Not quite the top. Didn't make it. 50% back. Not even, yeah. It just made halfway. So it took like 30 years about to get halfway back from the peaks, guys. So buy and hold. That could happen. All right. So what are we dealing with today, guys? Monthly candle breakdown. December. Pulling back up. And that's why I look at charts. Oh man, it can't go back down to 16,000. It's too far. Well, scroll back. So in the grand theme of things, from the bottom here, let's check it out. Oh, how much it pulled? They even pulled back 38% yet. So there's still a lot of air. 50%. You're gonna hit some support here, some resistance and support. After that, 61, another zone of congestion. You could bounce off these two, and after that, 78 and full retrace. Very possible to get back all in this area here. Wow. So it's just at the beginning. So when you zoom in, always be careful when you play around with your chart. The chart, it skews your perspective, right? If you see here, I only see the bottom scenario, but hold on. But if I would have the price action like this, I say, oh, look, it's going to go up. All right. And right now it's pulling back, getting closer to that 12-month moving average, getting closer to that breakdown line. That's super duper important. 21,450. Okay, let's zoom in on the weekly. Below the Ichimoku cloud, declining 30-week MA. Below my monthly defined support. Oh, is this gap down here? Okay, it's not weekly defined support that's been tested a lot. Tested here. So right now we're hitting that weekly defined support and have some more here. So it has these two levels to go through. A weekly close above this, and after that, it's gonna go and try to challenge this previous support here, closest to the breakdown, which has more weight than further away as support. And then after that, it's gonna go challenge that monthly. So it's still in a stage 4, guys. And this is actually pretty. Since December, this has actually been a better short. The index, instead of shorting the SPX, you shorted the Nikkei, was underperforming it. Wow, it's having a hard time, guys. So the Nikkei has a lot of room to go down. You have those levels. Check out what I'm going to do right now is go back on the monthly. I'm going to redefine some support that we could have on the way. Oh, there's even some here. That always define your support. Then when you hit on the weekly, you might not see this area here. The weekly candles, they're probably the wicks here. It's hard to see the monthly defined support on the weekly, sometimes almost impossible. And then when you draw the line, oh, that's why the price action came close above. Always check it out. And if you draw scribbles like I do, eventually price action is going to move, and you're going to see the price action bouncing around in between these levels, creating that zigzag motion as you go up. Hit support, come back down, hit resistance, hit support. This time we break through, up and down, over again. All right, Pat. Okay, so what could happen right here? I want to get some clues by. Let's check the overbought indicator. Ooh. So on the weekly candle chart, still in very close to the bottom, but this is normal. More on the monthly, but when you're in a downtrend, it's normal to stick around the oversold area. Just like when you're in an uptrend, you see price action keeps going up. Resets, keeps going up for many weeks as the price action moves here again. So it's normal in the bear market if the monthly chart is bring the action down. The weekly, you're in a stage 4. It's on the daily. On the daily, that resets often. It gives that energy. See, that small price action has it shot up the reservoir of energy. Now you're in overbought territory. You even have some divergence that's going to start building up. So if the price action starts rolling over here and you start going down, where is my, see those highs, lower highs on the price action, higher highs on the indicator. That's bearish divergence. So you're going to run out of room here, run out of steam. And after that, that should push the price action back down. Closing in on the 50. So we'll see. Maybe it's going to continue a little bit here. Hit that weekly defined support. Maybe hit that monthly. Hit that 50-week moving average. So in the weight of evidence, you're starting to have these technical levels all working together to try to bring it down. So you have more technical levels working on the bearish side than you have on the bullish side right now. And that's the damage that's caused by steep falling from a ride up. All that price action that goes down like that, well, now it works against you on the way up. And that's what creates stage 1s and stage 3, guys. The market has to go sideways action to thin out that action, dissipate those buyers, turn sellers. They give up, they go do something else. And once you tight range, see this consolidation, then you have a move explosion, tight range, explosion. So that's why it's more likely that this is going to go back down here, have some type of consolidation here, and then the market either decides, okay, we're dropping more or we're going back up. RSI on the weekly, going back to the halfway mark. Do I have divergence? There's no. Sometimes I look also for the inverse. I look for bullish divergence. So on the way down, we did not generate bullish divergence. The oscillator or the is going back, lower lows on the. So there's no reservoir like energy built up that's gonna propel this upwards based on that. Well, there's no divergence. If it would be bullish divergence. We don't have that. Even here, like further away, sometimes, and we still made lower lows on the indicators. So let's see how far this thing could go, hitting that weekly, daily, and it's pretty good right here, man. If it could come down close to the moving average, hit that weekly defined support. You have that really close by monthly defined, support and resistance here. And that looks pretty sweet, guys, for a short. Just have to wait just a little bit more, guys. Just a little bit more. Start seeing those candles turn around. And that's it, guys. Thanks for watching.